Hey guys, I'm going to start this live stream, and while people join, just kind of recap where things are. Like always, none of this is financial advice. Always do what's best for you. Just use this for your education and entertainment purposes only. A lot of geopolitical news overnight. Woke up to a lot of, action out in the Middle East, and how does it affect the market? Well, if it's a black swan and you do believe we're in a bigger downturn, the sentiment should get worse and things should unravel, and not there wouldn't be compromise, there wouldn't be restraint. You'll see retaliation, escalation, and unraveling. So if we start to see that tomorrow, rest of the day today, then that is leading to more black swan type situation. If we don't, then it's just noise that we've a flare up, and the market probably won't care about it. If it does escalate in some way over the next several days and unravel, then we will start seeing the markets react to it. Probably, as you know, we said higher oil, and of course, technically, oil looks to be, pulling back. But we did say last night in my update we could push higher in this X wave, in a three wave move, and it could come to 137. I'm sorry, 130. So could that news, this black swan, push oil here? It's possible, but I think it would need to unravel. And also, this is a good sentiment test of what the mood across the world is in terms of, you know, because if it's a bear market, if we're getting into a decline, if we're getting into a crash, then conflicts get worse, sentiment gets worse, people lash out, things don't get resolved, compromises don't happen, people will react irrationally and not rationally. The obvious solution won't be pursued. The unexpected solution will be tried, and that even if it's at detriment of the person who's initiating it, even if they're all best judgment says not to do that, but they do it anyway. So that's if we see that, that is a typical bear market. That's a bear market sentiment. That's an interesting indicator to see where we are in the bigger picture of things in the world and in the indices. But if we see resolve and compromise and restraint, and and we pull back and things settle down, and then I'd say that's a bullish market type reaction. And if you remember, when Trump killed the Iranian general in Iraq, there was that initial sell-off, but then it didn't escalate and the markets returned back into bull mode, and that's a bullish indicator that sentiment isn't ready for conflict, a crash, or unraveling. So for me, I want to, we see that unravel, then we're in a bigger bear cycle that perhaps could continue to drag the market down as the sentiment gets worse. But if we don't see that, then it actually says people, are pretty still optimistic about the future and want to try to work things out, which is a bull market thing. And that also will tell you that perhaps if you're betting on the greatest crash of all time, that's probably not going to happen. So we'll see how this unfolds. But interesting, the charts did predict a sell-off of some sort here, and maybe we'll get that. And like I said, if the markets are going to have a historic crash, it needs to happen next week. And could this be the catalyst that triggers it if it does spiral out of control? And the only way I could see it spiraling out of control to create this kind of crash would be direct confrontation with Iran. So if you see that, where Israel brings it to Iran directly, then yeah, I would be imagine that the indices will collapse as oil pretty much goes parabolic uh, beyond 130 probably much higher. So I think that's kind of where I think on the geopolitical side of things, but we'll go into your questions and see how you guys want your charts, see what you're looking at. So let's start with Sofi and Neo. Sofi is in the financial sector, and that that's a dangerous sector to be in. But the SoFi chart had been playing out the way that was expected here. As you can see, we had the short area here, and we really just missed it by 10 cents. But as you can see, now we're going into something much more bearish, and you did break this neckline, and you're just it's trying to back test it. This looks like it's on the cusp of a waterfall sell-off. I would there could be another opportunity to enter on the short side, potentially, but it looks like to me you have like you're probably in another wave 2 of some kind. Either it's here, and then you have another one too, but more realistically, you're still in 2, and you can get another opportunity to short this if you get a little more upside early next week, up to 857 in this 1-2-1-2 crash pattern right here, in that area. So that's the setup for this stock. 1-2-1-2 crash. You have lower lows here. Let's take a look at the daily. And you see you have daily divergence with this peak right there. So that destroyed the corrective structure potentially. So for me, this is kind of how I would label it. If the 4-hour cycle breaks higher, breaks that peak, then you could say 1, 2, 3, 4, 5, and I still would think this would be a short area around this box. Then the next one is Neo. Neo is we always had the target at in the $7 area for this sell-off, and I think we got very close to it. As you know, the oil spiking up could help those stocks here. So again, we had this 3-wave move here, A, B, C for the connector, down in Y in another 3-wave move. So this sequence is finished here. So Neo should be continuing its run higher from this point. We did get to 790. So it did hit that $7 level, and now it's probably building the base from there. If this were to break, now you have a connector for this whole move down, so that would be detrimental to Neo, which would probably take those lows out and go much lower. So this pivot has to hold. If you could see here, we're breaking up on that. Let's look at the daily. Even the daily's breaking up. So this is a connector now for the entire move. So you would think there's more upside, but again, it doesn't have to. We've seen shallow connectors before, and those result in catastrophic breakdowns for stocks. Looks like 5 swings up to me, with a little bit of divergence. So I would expect at least another push higher, even if it is a connector, and then to 9, 10, fill this gap here. And it really is going to need to get through $10.54 to really confirm the low is in. But I do believe you have more upside, and you're in a wave 2 at the moment, and you'll get something like this out. And the question is, are you still in 2? You could be. A lot of divergence here, so I wouldn't get too excited. I think you could still be in wave 2. It could come back and retest this low. It could also pump and fail, which is probably the most likely outcome here, like that. So That's kind of what I'm thinking, and then it runs after that for the impulse. So this could be a good setup if you can get this pullback into to erase the divergence on this 45-minute chart and pull that down, but respect that low. That's a good long setup, long trade setup. So if you can get this, or maybe it's already done, and then we get some capitulation that holds that, could be good setup. But I think it will probably pump and then be a rug pull down, and then it's going to test this. And if, like I said, if this breaks, then it really does open up the downside to much lower levels. And this would just be some kind of 4 and 5 down. So this would be a 5 down, and that'd take it to 465, $3 as the next area where it could find support. But do what's best for you. All right, that's all I got on that. So it looks like I got a super chat from Donald. I'll go through yours. CVX, is that I don't know if that's a crypto or not. I'll just look at it. If it's not a crypto, yeah. Oh, Chevron. Okay, yeah, Chevron. That's right. Yeah, so Chevron. Someone asked me about Chevron earlier, maybe a month ago on the live stream. We were looking at Chevron, and let's see how it's played out so far. Um, pretty awesome, right? I said short that, we'd pump up into there, and a massive rejection. So there's no change to this. This is the game plan. So Chevron's heading to 120, 103. Now, if the Middle East decides to flare up, like I said, if we get this black swan, as you know, this chart, I wouldn't trade this chart anymore. The price of oil will go higher, and it would morph into a more bullish chart. So who knows? So it's too early. I think you got to ask this question on Monday or on Sunday night futures and see what oil's doing, what the Middle East is doing. But I guess as long as you're below 171, it's in the bear mode. The bears are back in control of this thing. But if the bulls can take out that pivot at 172, then it really opens you up for a whole nother swing higher in this connector, and you should take out that peak at that point. And then if you take out this peak, then you really have to say it's a 1-2, 1-2, and you're going into a wave 3 of 3. So I would say just watch that 172 level. If you're below 172, I would expect further downside. But if the bulls can retake 172, then this chart's invalidated, and I would recommend trying to get long the stock at that point. This won't happen, but my guess is for that to happen, oil will be pumping hard, and very. But this is it. This is what we had here. 1, 2, 3, 4, 5, and then the connector, and now down. Okay, UNG is pumping too. I think that natural gas finally found the bottom after all these months. It finally is breaking out. And again, if oil goes up, it's just going to help it. It lags oil. It always seems to do that. And there's your 3 waves down here in a flat pattern. And it looks like to me it's about to go into a wave 3. So as long as it's above 641, we should be breaking out into a wave 3 on natural gas. And I believe Germany started its coal-fire utility plants for the winter, and and that type of thing. So I think something to keep an eye on here. So here we go. Here, like that. So that's how I'd look at it. Maybe that 3's done here. but it can keep extending. I think that's the important level. If 642 breaks, then like everything, it will waterfall off. It will break that pivot, and then this is just a wave 4, and then you get a wave 5. So it's bullish against that low, and I believe we're going to get a breakout. Then Boeing, I thought it looked like industrials were trying to bounce here. So Boeing is in a bounce area here, as you can see. Here, it's trying to bounce in this connector. If it can't bounce, then it's something much more bearish than what I have, because then it's extending to the downside, and then that means this bigger view that I have here is wrong, and perhaps the X is done here already, and we're going to break down to this $40 area. So that's why if you're betting on a bounce, you got to be really careful going long and have stops, because if this is that chart, this will just keep going down, and we won't get this bounce. But we should get a bounce here and then a failure for this 2-wave, something like that, before a more catastrophic problem happens again in the company. So I think this is the chart, and you'll have to do what's best for you. And like I said, if this bounce fails or doesn't occur, and we just go, then it could be the other chart where this is X and this is 1. This is some kind of 1, maybe here, and then a 2 in a flat, and then like an A, B, C. Again, not ideal. Or maybe this is the flat here, somewhere like let's see. So C, B, A. So maybe that's the flat is here. A, B, C, and actually put the X there. That would probably be the right way to do it. So that's why we got to keep an eye. So if it breaks 179, then this is the chart I have labeled. Then it turns into this: A, B, C, and then it's set. And then this becomes like a 1, 2, 3, 4, 5. If Bowen does that, then the market, the grand super cycle is crashing. This would be going back to the COVID lows or even lower for the indices. So this is interesting. Yeah, but I would expect it to bounce by now, especially after yesterday's pump. It didn't really pump. So this may not happen. It's kind of weak. All right, thanks for the 5 men. All right, so I'll just keep going through the list, and if you haven't followed me before, super chat, I go right to your question. If not, I'll answer a couple symbols and then move on to the next person so people can get their question asked, and then I'm usually on for about an hour. Marianne, what were you said about the over conditions and metrics all over? I'm not sure what you're saying. I'll have to move on. Zishan, Solana, and Matic. So crypto is behaving in a way that is showing a lot of support. It's interesting, but crypto has been known to spring a lot of traps on people over the years. So you got to be really careful with that. So Solana, I've always said that was kind of a coin that was showing a better chart than some of the others. We went with a more bearish interpretation here because of where Bitcoin was heading. But as you can see, this 2-wave could just extend. Now, if Solana can take out 24, that would be an impulse off this low. But it's still not ideal, because it could just be a massive flat like I showed before, C, B, A, and I could put the 1 here. But I don't like it. So I think if you believe in this chart, you really need, the bears need 24.78 to hold. If it breaks, then it could be more bullish and take another swing up to even these high $40. So this is a chart, but this gets invalidated if 2478 breaks. And right now, just like Bitcoin, it's at a very important decision moment. Is it going to turn down, or is it going to actually surprise people with an impulse and then pull back and then come out? So this one's that Solana, and then Matic. Yeah, Matic had a bad situation develop. Let's see how this chart's been playing out. So we had X here. So we're in Y. So this should be a Y here, and so you would expect another push lower to finish this Y, and then you'll get a bigger relief rally. Bigger relief rally. Squeeze, short squeeze, whatever, but that would fail. And then this push should break that low, and once you do that, then this leg is confirmed that I have here. If it can't break that low and we finish, then there is a chance there's some kind of bigger rally ahead that could take out this peak. But I do think it's got this leg missing. This leg's missing here in this Y leg. See, too much divergence. Let's look at the 4-hour. Way too much. So yeah, we haven't had that capitulation C leg yet in this 3-wave move. So it needs more downside. Then, yeah, just where's Bitcoin going? I mean, Bitcoin, like I said on my last video, is at a massive decision point, right? I mean, it's ready to drop. If this count is right, it's ready to have a free fall here. Now, if this doesn't happen and we push higher, then you have 1, 2, 3, 4, 5. But I could also say 1, 2, 3, 4, 5, and then call the low in here, and then say it's a lead-in diagonal. We come up to like 29,000, come back to 26.9, and then go into vertical price action. If they do that, I'll be buying the dip in crypto. I'll be more aggressive buying the dip if we take this out. So if we take that out, I'm not shorting crypto. I'm not buying it. I'm on the sidelines because it's too confusing. But if it turns into something like this here, then I would be looking to buy this pullback. This pullback against this low, and that's the setup. And again, it's not ideal because if you look, these are 3 swings, so the interior structure of the wave is not the way I would like to see it for that, but I would have to force that labeling because there's really no other alternative unless it's some kind of flat again, which it could be this. So that's another possibility, a more bearish possibility. So that's another option. But doesn't have to do that. That would get it to 28,959. Excuse me, if that happens. So that's why I'm on the sidelines. So I got to let this play out more. It could do so many different things. So you got to do what's best for you. But I do think, the market is confused. The traders, even the whales, are probably confused on what's going on here. So if you're really playing it, I think technically there's not a lot to go on. But I would think that if this is what I have, 3, 3, 3 in this type of pattern and not a flat, then this is ready to dump. And if it doesn't, then this will find sellers here, and you should get a pullback, and then you'll have to make a decision of whether to buy the dip or play the flat. And if it's the flat, then it will head to 21,000. But the rejection here would be massive. So if you come up here and you get a little bit of a fade and choppiness, then I'm like, okay, then it's a 1, 2, 3, 4, 5, buy the dip. If you come up here and get a massive drop down to 25, big candle, all right, then we're going down here and it's a flat. So that's how I would look at it. I would look at how it gets rejected here to decide. But right now, I would be on the sidelines on a lot of crypto. The other thing is here you have this left shoulder head. Are we forming a right shoulder? Break the neckline, 21,000. So do what's best for you. It's really tricky. So for anyone else that has crypto questions, I went through it all there. So hey Elmo trades, nice. I see you. Space Silver, OMG S30. I'm not sure what that is, but I'll type it in here and see what comes up. Oh, Sweden. Okay. I assume that's what you're asking about. OMXS. This. I'll do it from the NASDAQ side, I guess. It looks a lot like the American indices, right? You have this bottom that never capitulated, but let's confirm it. You see the divergence. That is people too eager to buy the dip, so the market never capitulated. So what happens is you get a phony rally higher, it runs out of steam, and then you get the real sell-off. And I believe that's what we're in now. This is just some kind of ABC here. And this is like a 1, 2, 3, 4, 5. And then you come up in 3, but this is, as you can see, truncated here with divergence. So so I actually don't like that labeling that I have here anymore. So this is some kind of 5-wave move off the bottom. WX. And it's interesting. Yeah, this one's interesting because of the RSI gives a different signal here than the American indices. So you know, clearly there's one cycle with no divergence here. So it's a 3-wave cycle, right? It's a 3-wave cycle. And now you're in, you would think you're in Y, but I bet we're still in X. And then we're doing something like that. So that's kind of what I think you'll see. But I believe whenever this happens, it will fail. It will come back to retest this low. This could be a run-in flat. In fact, it could be done here. So if we look at it, you have 3 and 3 up that leg. And you can see on this leg, there's really no divergence. So it's really 3, 3, and now you need a 5-wave move down to finish your X wave. So that's probably your first swing down, 1, 2. And you could see that here. Your cycle, you broke it. You have a little bit of divergence here. Let's see. So let's go to a 4-hour chart. Take a look. Yeah, see there's your divergence between your peaks. So so this is 1, 2. And now it looks like the rest of the market, there's going to be more downside coming to finish this move. And so the target could be somewhere around 1984. This area. And then you should get a nice bounce in Y. But my guess is at some point in 2024, it will fail and have a spectacular crash back down to the lows. Yeah, there's your next one too here. Something like that. And go to the 45-minute. So there's your connector. And so a little more upside, and then if you want to take a shot at a short trade, then this will be your area right there, 2161, 2169. And this gets invalidated if it breaks 2212. So good luck with that indice. So this is kind of how I think it'll play out, something like this. And then there's your three wave reaction up, and then this is I'll go back to labeling that like 3 waves down, like I had it earlier. I'll be looking for that. So that's what I'd look for. The surprise would be if it's already done. It would be unusual, and it wouldn't be per my system. So there's always a possibility, but it doesn't seem like it would do that based on the way it topped out here. Okay, so we'll just we'll add that up to my other indices up in this area. We'll see. We'll keep an eye on it. All right, guys. Thanks again. We'll just kind of keep going through your comments. SPXS. I don't know if I looked at that yesterday or not. I don't remember if I showed that one. Let me see where we are with that. So it did hit our first target area. And remember, I showed this area before, and we hit that 1, 2, 3, 4, 5. So here's a problem. A Y wave can't have 5 waves in it, so this isn't a good pattern. So if we look at the top, you see all the divergence. Here, you even have it on the 4-hour. So what that tells me is it's not done technically, even though in price it could be done. But again, you're not getting capitulation. It's just, again, everyone's so eager to buy the dip in the market. It just doesn't allow the market to capitulate, which only prolongs the choppiness and bear market until some news hits that gets it. So right now, this is not a connector wave for this whole move, but I have imagined it's going to turn into that soon. Once that breaks, which I believe it seems pretty likely it'll break on Monday, then you have a connector wave. You would call Y done on that peak here, and then you have an A, B, C, probably down to 1455, and then you'll run up a whole nother leg higher. So that's probably my preferred view. So this trade setup is now over. There's really no trade on this one anymore. But if you can't get that, then this presents an opportunity down here around 1464 for a whole nother swing higher. Like that. Now, if you believe it's the market, the greatest crash in our lifetime is going to happen next week, then it's not. This isn't the chart anymore. Then it's something a lot more bearish. So save this picture in your head, And then what this will turn into is if it's the greatest crash of all time, then we still are in our sequence 1, 2, and we would have a 1, 2, and we hit 3 of 3 out. And what that means is the 4-hour doesn't break. That means like Monday morning, we're gapping down, or we find support on this trend line, and then it goes vertical, and we take out that RSI peak, and everyone's caught offside. That went long on Friday, and all hell breaks out in the market. And so, of course, what's the odds of that? 5%. Now, after the news last night, oh, maybe now you have news that could do that unless it escalates. So I don't know. But the chart does show that this can still happen. So if you guys are going long on Friday, you didn't get confirmation, right? You didn't get that confirmation that it's safe. You're still in bear, even though it was a powerful move on Friday, the bears are still in control of the market, guys, until that 4-hour cycle breaks. Because once that 4-hour cycle breaks, then you've got a situation where this sea leg can go, hell, it could go all the way down here again for all we know. But very unlikely it will break 12. But this is the most probable path. But you guys got to do what's best for you. I not a fortune teller, but I do believe this is how the market is most likely to play out now. And I'll draw that area for where it could be purchased again for a setup. Now you notice this looks a lot different than the technology SQQ, right? SQQ hit a buy area on Friday. So perhaps our trade is technology pulls back and is under pressure while the other stuff runs that didn't run. Maybe staples and all that shit runs on next week. So maybe that's what this is saying. Technology is going to get hit hard next week. Hit hard here, but the cyclicals, energy, staple, all that shit gets pumped. Healthcare, and it pushes the overall market down, even if technology is lagging. So I think that's what this is kind of telling me. The other thing it could be telling me is this setup here is showing that we may get the 1 2 1 2 and the 3 of 3, the meltdown. But this doesn't look complete because we took this high out when we don't have divergence. So if you're bullish, it's very unlikely you're going to new all-time. You're gonna on the SPX you're gonna break this low. Hey Anonymous, thanks for that. 7, I'll go through your questions. AEHR, let's see where that is. So we peaked in 5, right? I was mentioning we've traded this pretty well, right? I mean, you've been always asking about this. We had the buy here, right? Essentially went vertical, and then we called the top here, and essentially it's pulled back. Now, it's correcting the whole move, right? It's correcting the whole thing from the very beginning. So the chances of this being done is slim to none, right? It's too short to correct, and it's not deep enough. So should it bounce? Yes, it looks like it's in a bounce area for the first wave down right here. And so this is the area it should bounce, but that bounce is almost certain to fail. What I would like to see is a bounce and then another low. That's what I'd be looking for, and it looks like it's already started its X-wave bounce. So that's how I would look at that. And then I think what would be ideal is to break this trend line that I have here. And then when that's done, it should be good to go. So let's see here. Let's take another look at everything, bigger picture here. Yeah, so 5, and we pulled back. So could this be a 1, 2, 3, 4? Could it make a new high? Let's take a look at that real quick, just to confirm. We have to go to a monthly chart. So yeah, see this monthly cycle's about to break. That will confirm that it's not a wave 4 in my mind. So, um, and you know what's interesting is in this push higher, you never took that RSI out. Very interesting. So yeah, it could even be something even crazier, where it's 1, 2, 3, 4, 5 because of all the divergence, and then this Y comes all the way back down, and it has a massive meltdown. So yeah, I would be really careful being long when that monthly cycle breaks. So when this monthly cycle breaks, it could have a free fall down moment, a free fall. Looking at because of all the bearish divergence here at this peak, that could be a massive extended fifth. This could be a massive extended fifth wave. And if that's the case, technically the market should come all the way back to the bottom and erase the whole wave 5. So I believe this pivot here is key now. Like as long as we'll like let the X wave play out more, and then if this breaks, then it's game over. And then so this could be a massive opportunity for a short, like a short, that dream, short traders dream of, put buyers, could dream of if you can get this up here and get a nice 3-wave move. But we'll see what happens. Good luck with you on that. Mara, it's all about what Bitcoin does now. If Bitcoin does make a marginal new high and pulls back, Mara will chop sideways and form a bottom, but it won't go down to the $5 area. This area gets tested if Bitcoin goes to 21,000. So look, we called this shot at 721, and my God, it hit it exactly, right? And you go, how did Elliott Wave Sage know that? Well, the market is so predictable, and this is just for you guys that watch. When you have a 5-wave move and the waves overlap, I would say 80% of the time the market retraces between the 2 and the 4 wave about halfway through. And there's no rule in the rule book. You're not going to see this on, Kramer or on CNBC and all this chess player traders. It's just something I've learned over the years trading. And so I could care less about anything. I was like, this is where, but, and so here we are. So I think it's tempting because if Bitcoin does make a new high and just pulls back, this thing's just going to kind of trade sideways. And I bet it won't. I bet that low at 715 will hold, and it will just trade like a 1-2, and then it'll come out of this. So I don't know. I think it's all about what Bitcoin does at this point, and you'll just have to do what's best for you. I mean, if I look at the wild wave, let's go to the daily. You have a little bit of divergence here, so that's concerning. But it looks like the daily cycle's about to break, right, on this. Or if it already broke. See, it already broke. So the bulls are in control. So you obviously are going to have a connector wave coming. So this move is going to have a connector wave, and we could already be in it too. So if we're going to go to 5, it looks like it's got some more upside. This could be a 3-3-5, and we could see this rise up to 10, 11, and then head down to 5. If Bitcoin's going to drop to 21,000. That's the bearish interpretation. The bullish is it's already finished, and it's going to just start to impulse out of this in a series of 5 waves and pullbacks. So, it's tough to say because of the chart, like I said, in Bitcoin, and that's why I'm really on the sidelines on crypto until I get more. It becomes a little clearer for me on where we are heading here. And you see the market's stuck. It's confused. They don't know. No one knows what to do. It's just kind of, guessing. High or low. Technically, it's trapped. It's stuck. So it's like a stalemate. But someone's going to win the stalemate. And once that's decided, then you'll know what to do. Riot. Let's see how Riot looks. How did that go? Almost in our buy area. Uh, it actually missed it by like a penny or so. So it's the same thing. It's probably in the same situation now. Uh, Here the divergence is more pronounced. So Riot may be telling us that yes, Bitcoin has got another leg lower. Um, 3. So we could still be in this setup, something like that. So we could still see it run to 1332 and fail, and form this like left shoulder, head, right shoulder, and then we break down to retest the lows. And of course, this wouldn't be valid in that situation. This actually seems more likely because of the way we bottomed here. But you'll have to do what's best for you. And in fact, this almost looks like 5 waves down in an A. So it's probably better to label it this way. So that's why I think Mara is the stronger stock. But maybe Riot is telling us, yeah, Bitcoin is going to pump and then have a crash. So maybe what Riot is telling us is, and I haven't looked at these charts like I'm doing now. Maybe what Riot is telling us is, yes, we're going to get this flat. We're going to get this where we get this last pump and then a massive capitulation move to 21. That would line up. Bitcoin doing that will match Riot. That matches Riot doing this and then coming back, down to this area. And then that would also set up Mara to rally and then come down to the $5 area. So don't know. I wish I could tell you which one is going to do, but I think Bitcoin will decide for us which path. But then you also have to think: are you an investor? Or are you a day trader? Because if you're an investor, and you just look at this chart, when we do hit the wave 3 and Mars trading $60, are you going to care if you bought it at $8 or $5? You're not going to really give a shit, right? I mean, if Mars trading at $55 or hell breaks this high one, and it probably will one day, you're not going to care. Oh, I bought it for 8 or 7. So at some point you got to have the bigger picture in mind of what you believe in, your conviction. So if you don't think it's going to go to 0, I mean, at some point you're never going to get the exact bottom, and you're just going to have to, hold it, and then yeah, you may lose some money, but the bigger picture. You have the bigger picture in mind. And yes, and then when we're trading up here, everyone that I talk to will be like, "Oh, when Mara was 8, I would have loaded the boat. I would have bought $100,000 of Mara if I could do it." And I'm like, "Shut up! No, you wouldn't. You wouldn't have done that because look, we're at $8 now, and how many people are scared to buy it." So that's the thing. So that's why the market does it. Makes it so hard. You don't want to pull the trigger, and so you either have to have the conviction as a long-term investor or not in crypto. But anyway, this is it. This is the chart. You do have the 5-wave swing move, so there is pretty good confidence that low will hold. But there's still some games to be played probably here. So anyway, you guys can do what's best for you on that. And then Mitso, I'll go to your question. Square and AMD. Yeah, I was looking at Square the other day, and I was worried about nibbling at that. It did hit a buy area, which is why I was looking at it. But I believe it's just a wave 4 now. And if you were following me, we predicted this crash coming. A lot of people were trying to buy it on this trend line, and I assumed that it would break and just crash straight down, and it did. Now it is tempting, but I do believe you could be buying a wave 4, so I do believe you'll get one more push lower on this at some point. And I have this line of support tagged around 35, and I think that's really a strong area. So I do believe this 3 is probably done. You're probably in a 4, and you have one more push lower. And then, yeah, this could be, again, if you believe in the company and you have the conviction, um, you got to pull the trigger on it, right? It's got to be unless you think it's going to go bankrupt. Now, the other thing is if it breaks this line of support, this could turn into a 1-2, 1-2, and then it could drop all the way down, to $10. So you got to be careful too, and have stops. So you want to see bullish divergence on this fifth wave, and you don't want to see any gap downs, and you want to see a lot of overlapping waves on this wave 5. So that's what you want to see, and so it's still not a good. That's why I don't like buying it here. I just don't, because of those reasons. But yes, it's getting my attention for sure. And then AMD, I believe, has a bounce and failure coming, and AMD trades with the SOXS pretty closely. So SOXS is the short, or the semiconductor SOXL. I'm sorry, SOXL is the bullish. So the reason I have this chart, so if this is the right chart, then AMD is going to fail, and then it's going to have a massive drop to finish its correction. I believe, though, the lows will hold. And as you can see, we still have more downside, 1490. So I do believe that the semiconductor industry may be bullish short term, like day trader wise, and then it's got a dump, a rug pull coming. And I do think that AMD should. It wouldn't surprise me to see AMD go a little bit higher early in the week with Nvidia, like I showed you, and then get rug pulled. So here's my target area. Short area for AMD is at 110, 114. So I do think it still has opportunity to push higher, but I do believe that rally will fail, and we should be coming back down to the $76 area somewhere down here later. So that's kind of the setup, okay? And a lot of people are excited because it's like new highs. It's possible, I guess. We can look at the RSIs and take a look at the daily here. So you did bottom out, so that is interesting, right? You did bottom out. You do have bullish divergence, so you do got to respect the bull case. So you can't get too, I do have this other swing down, here, but I think if it can break through 116, then you have to start thinking that it's going to make a whole nother swing higher. When does it have earnings come out? When's the earnings? October 31st. Yeah, it's going to be interesting. Yeah, we'll see how this goes. So technically, we could say it's finished here in a 1-2. But I looking at the overall market direction, that I still think we have lower overall in the market. It just doesn't make sense to say AMD is going to go to new highs. I think it's better to say that we pull down one more time. But technically, this is now the bulls are in control of this. So the bulls have taken control of AMD. So just keep that in mind. And we'll see some more upside, but I believe it will fail and succumb to whatever market sell-off, whatever black swan, whatever is going to cause this last leg down in the market, right? And again, this technology leg down that I have here, down here, that's going to hit everything, even the good stuff like AMD. Let's see NVIDIA real quick. And again, NVIDIA still got more upside too. And even if this is 3 and 3 and we go down 3, this top end pattern should play out and we should see it fill this gap. So that's why I think I just think saying AMD is going to go to 200 is just not. I think it's not, the market isn't ready for that, but this is definitely going to be one of the leaders coming out of the correction when it does finally finish. So if we get this will be something I would want to pick up because it's a strong stock. This is very strong. But yeah, but if you can break 116, then who knows, right? I mean, what one, two, and you come out. So, but I think it would need earnings to do that, to push it out like that. All right, Anonymous, thanks again for another five. Litecoin and Bitcoin Cash. Let's take a look at those. Yeah, Litecoin. Oh, those are on my watch list. So, I mean, Litecoin's in an interesting area because you do have five waves off this low here. And I've always said, between the 2 and the 4, and that's where I have the box. And look, it's staying supported here. And because it's staying supported here, I mean, you can't be that bearish on Litecoin. However, again, what is Bitcoin going to do, right? If Bitcoin's going to go, if Bitcoin's going to just do a 5 and pull back and run, then Litecoin's at a bottom. This is the time to buy and accumulate it for this wave 3. But if Bitcoin decides to rug pull in a flat down, well, then Litecoin is going to maybe make a marginal run up here to 72, 70, and then it's going to pull all the way back to either retest this low at 38 or break the low and finish the ultimate flat pattern at 21 for the ultimate capitulation. And if you guys don't know, there is a pattern for a flat here in this A, B, C. And then the flat would be 1, 2, 3, 4, 5, and we would hit like $20. So that's why I'm on the sidelines with Litecoin. But I mean, if Bitcoin can rally, of course, Litecoin will surprise everyone because then it turns into a 1 2 1 2 1 2, which is the moon pattern. That's when crypto's moon. So it's really tough, man. You're going to have to place your bets on where you think Bitcoin and the overall crypto market's going, but you have to respect that there could be a flat and it could get rug pulled down to $20, and then it could have an ultimate run like we've never seen before after probably whales will capitulate, which is really what I think this coin needs. Is it needs whales need to capitulate. I think that's why it never really ran up. It's been a money tree for the big buyers that bought this thing in 2016, 2017. It essentially have been their money tree, and they comfortably sell all into these rallies. I see these guys post, the whales post about, their Lambos and shit. Those guys need to panic sell, and we need them to dump their coins, like a bunch of those whales. And I believe if Litecoin does drop and breaks the 32, they will panic sell it, and that's what we need, like Ripple kind of has done, right? You need that. So we need whales to panic out of this, to dump this shit, because it's just a money tree, and they just don't allow the price to come up as they just cash it in. They're just milking it. But we need the whales to capitulate. Not traders. You need whale. You need the guys that got tens of thousands of these coins to dump it because they see their money evaporating and they want out before the So I think that's why I'm favoring the flat down here. And then Bitcoin Cash is really beaten down. I have it as a 4 and a 5, just one more marginal low down. This would line up with the Litecoin flat scenario. But if Bitcoin can hold, then this will come up in 5 and negate this. And then we'll be back to a 1, 2, 1, 2, and out. And you can see a left shoulder head, right shoulder, breakout to 600 or higher. So Bitcoin Cash, you guys need to take out 258. You take out 258, then it becomes an impulse. And chances are the bottom's in here, and it's just a 1 2 1 2, and then I would say this is a pretty bullish chart. But for now, I'll show this pattern. But really, again, depends on what Bitcoin's going to do, and it's essentially not even moving. Look, it's like that's how frozen the market is. The market is so confused what to do right now. Stalemate. Okay, I got some more super chats, so we'll go into it. I'll go to the next one. Mark for 10. SILX, Tel, Redfin. Okay, we'll look at those real quick here. SLX on the ASX, it looks like. Yeah, on the ASX. Okay, let's take a look at that. So you see the three swings here. It looks like that low did hold, which is important. And you see no divergence on the daily. So that's actually a good sign. So that's positive, just right there in general. But it doesn't look like it went deep enough, but that doesn't matter if it's really bullish. And off the low, it looks like you have 5 swings off the low there. So very interesting. I don't know what this does. 1, 2, 3, 4, 5, and then you came down in 3. And you actually retested and held that low. So this thing could be ready to take off. I mean, this thing could be like set up for a massive move higher if this is the right count. Because it looks like this corrected the whole cycle. Let's go to the monthly. Yeah, see, you've corrected the whole cycle here. You have divergence at the top for 5 waves. So this is your first wave up. And now you're down in 2. And it could be ready for a wave 3 moment. Like that. So very interesting chart. So again, thanks for bringing this to our community. We always like to look for things like this. I wonder if it's in energy or something. What does this company do? Strong buy. Uranium. Interesting. No wonder. Yeah, uranium. If natural gas is pumping, uranium's going to pump. So that's not surprising. So yeah, this thing looks good, man. I would say if we do break that low though, the pivot is broken, which means even if it were to bounce, it will be a trap and there'll be another swing lower. So look at this. I mean, this goes back to 2011. Left shoulder, head, and now the right shoulder. I mean, this thing is gonna skyrocket, man. If this can break out with the right news. So yeah, so this thing's got to hold. Now, if this breaks, then this could be an A, B, C. It could pump and trap people and then actually come back to $2. So that's what I would be watching for. This low right there. I would be watching that low at 292 has to hold. It breaks, then it's a trap. It's traps. It will probably rally. It will probably break it and then run and trap and then swing down for a final low. But if this can hold, yeah, the opportunity could be tremendous on the long side. Interesting. And I guess this thing can really pump when it wants to. I mean, look at that. When it really wants to squeeze. Right? Not identical, but same kind of idea. Anyway, do what's best for you on that. So that's an interesting one. We'll add that to the commodities stocks. Okay, and then your next one is on TELL. Yeah, we had this one too. Looks like someone asked me about this before. So we had this AB, we called this 5 waves down. So I would just change the label in slightly and just put the 4 there and put the 5 there. So this should be ready to roll at any moment to the upside, as long as we have the right RSI swing sequence here. So let's see. Bullish divergence is good because you have a 5th wave. That's important, but on the higher time frames, you want that divergence erased. See, you don't really have that, so that's a little dangerous. So I wouldn't get too excited here, but from an Elliott wave standpoint, the count is good, but from an RSI standpoint, you may not. It may break this low still at 94 cents. So I think as long as this low holds at 94 cents, this chart is still valid, but I don't think it's likely given that you don't see 3 swings in this chart. And then if there's not 3 swings, then more than likely it's going to break 73 and it's going to go into a bearish mode and really have some downside. So it's really at a moment of truth. Um, but if it's looks like it's natural gas, so perhaps if natural gas is going to pump, yeah, maybe this is done here, and we get this 3 and push out, something like that. So, I mean, yeah, this is where you have to do what's best for you. The chart has mixed messages. The chart's mixed picture, but the risk reward's good. I mean, if I didn't know anything, I would just buy it at $1 and have a stop loss at 95 cents. I mean, the risk is 5 cents to a reward of what, 300-400% upside. I mean, that's a pretty good risk reward setup right now in this TEL trade. And we'll add that one to the commodity. Okay, and then your next one is Redfin. Uh, yeah, wow, this did a round trip and even broke the IPO low. Yeah, it's kind of a sad chart. I mean, anytime you see the low, the all-time low break like that, it could be in a secular decline, and it's dangerous. But there's always hope, right? That perhaps that's not the case. So I'll try to give you a bullish interpretation of that here. So you do have the divergence at the peak, which is always good sign. Here you have 1, 2, 3, 4, 5. So this is like an impulse. Here, 2. Yeah, this chart is really ugly. Yeah, it's actually here. Let's see, 1, 2. Probably there, right there. That's probably it. So at least 5 waves off the bottom gives you hope that it's not a go to zero chart. So that's good. And then now the question is that the bottom right here at 279? We need to see where the low is. You see you got that divergence there. So this is an impulse down. Let's go to the monthly. Now the monthly does erase divergence. So that's okay. So I'm okay with that. So we could say that that's the low. So you're trading off of 298 in some kind of ABC massive correction, some kind of massive ABC correction. Yeah, you can't even see the connector, but it's essentially a straight down crash correction. So I won't even worry about where the connector is. So you're basically trading from that low. And now the question is it 3 up or 5 up? Here you have the divergence, so that's good. Weekly, you see you don't have any divergence, so you do have to respect that it's 3 up, and then this is 3, and then there's no divergence on that leg. So yeah, so this is only 3 up. So it's very risky. It's in an area where I would be on the sidelines if I was in this. It did hit a short area, and it's been rejected. It never was able to get up over 5 waves. So this looks impulsive on the way down here. So if 313 breaks, this could become a go to zero chart. And I don't know why it would go bankrupt or what its financial position is, but the investors, maybe they're going to dilute shareholders or raise capital, but then this really just turns into a massive 1, 2, 3, and then this chart really is just 3 waves up. It's just a reaction up, a corrective structure, and then it's just a go to zero chart. But we'll wait and see how it goes. But I think I don't like it. I don't like the setup, and you got to do what's best for you. I think there's better things out there. I don't know, you know, what this also says about home buying. Yeah, strong sell. Yeah, you can see why. So I don't know, but I wouldn't short it. I think this was the short. Yeah, you could have took a chance to short it there, but this is in like no man's land. All right. So thanks for the $10, Mark. Let's go to Jason for 5 at TMF. Yeah, TMF is in a bad situation because of race divergence. That's always a risk. Just using Elliott waves, and it was a calculated risk because I essentially backed into the low because you know if it were to race divergence, that would be detrimental to long-term rates going higher. But looks like that's what's going to happen. So this, unfortunately, this wave 5 is probably not a wave 5 anymore. This is probably another 1-2, and now you're in a 3 of 3 meltdown. So, but I'll update the count accordingly. I haven't updated this chart, so we need to do that. So you can see here that this peak here now takes out that peak on the daily. So now it's no longer a 3 and a 4. It's another 1-2. And it's just a system I use. It always plays out. It is sad when it happens and you're on the wrong side of the trade, which is always a risk trying to just trade Elliott wave swing count. But I took the risk because, again, the alternative was a big melt up in rates, which could be catastrophic, which looks like that's what's about to happen and we're in the middle of. So this would be a 1-2, 1-2 setup. Let me see here. Yeah, I would do it like that. Yep. So now you can see why things get really ugly here. So now you have a 2 here. So now we have to look at this leg and see what if you know where we are in that leg. You see all the RSI peaks were taken out. So we're not even in 3s and 4s. These aren't even 3s and 4s anymore. This is another 1-2 right here. So that's the count. So that's how it looks. Pretty horrible, right? Horrific. So yeah, I think they'll be doing some reverse splits on TMF. But what this also means is interest rates are going to go to some unthinkable levels, at least on the long term, and in a short period of time, which is why you know it was so unlikely. What they say is like a 5 sigma move. So you know the trade was you wouldn't get a 5 sigma move, but we got one. So now you stopped out, which is why you stop out. So what could happen here? Well, I mean, technically, yeah, the 3 could be done here, and then you start doing all the 4s and 5s, but it's unlikely. You'll probably have another 1-2 coming up, another 2, and then even bigger drop because you need that extension lower. But I wouldn't be looking to buy this anymore. The trade's over, and even TLT is like now our stop out area on TLT is $80, and it's almost certain we'll blow through that. TBT is the bond, long bond, short bond ETF. And if you look, it really broke out. In this head is like it's got so much more upside. So yeah, so I mean maybe the better trade is long TBT on the pullback. We should pull back to test this neckline at some point, and that might be the better trade now, and just start shorting bonds. So we'll see. But anyway, that's what's going on in the bond market. And thanks for the 5. And then discovered civilization. Thanks again. I appreciate that. Wow, I really appreciate the super chat. I mean, that's amazing. Here, hold on 1 second. I don't know the number 1. I can't quite see. Yeah, the number 1s. But however, how much you ever gave me, I really appreciate that. It was like this blocks them out, and I can't quite see it, but I do appreciate it. I'll go through your coins. Sheeb. Okay, BCH I covered earlier. I'll recap that, but you can listen more detail. But I'll say Shiba. Um, so Shiba had this count here. So we had this X wave. I wanted to see it push higher. Let's take a look where the RSI ended up. That's the peak. So it was this running flat type correction here. So that's the X. I'm going to ignore that. So now we're going down in Y. So we should get one more swing lower. So it's unlikely this is the bottom. But let's see if it could be. It's possible. It's almost like at the same level. Let's see what the monthly you can't even tell. So it's really hard to tell. But I mean, it would be better to have like cleaner to have this fail and go one more leg lower, where you have something like this to finish Y. Uh, so I think this is too shallow compared to the first leg. So I do think it's got more downside. But like Bitcoin, if it does push up higher and break this peak here, then this leg is finished, and you'd have to say it truncated, and it's in a new bull cycle. So I think it's really in an indecision point. It's really tough to say. I would be leaning toward this count here, something like that, in lower, and that gets you to like 394, 165. Right around there. That's what I would like to see happen, and if it can do that, then it's good to go. And if it breaks this, it could still go deeper, but this is the capitulation leg. So that's what I'd like to see, but you're gonna have to do what's best for you on this, and see. And actually, it's more like WXY, kind of like the first leg we had. So, and you see this neckline, and it was support, and then it came up and got rejected as resistance. You see that? So it looks like we got more downside coming in Shiba. Bitcoin Cash, just to recap that, it really is dependent on what Bitcoin does. But if Bitcoin Cash could take out the high at 256, that would impulse and negate the bearish count that I have shown here. The bearish count has one more low in this fifth wave as Bitcoin goes back to 21,000. But if it can take this high out, then it's 5 up here. Then it negates that, and then this bigger picture comes into mind where you have a left shoulder, head, right shoulder, and then you should get a massive breakout to 600, 700. So I think that's very important. But again, the market's gotta do it. You gotta take this high out at 256. But it's not going to be a straight line. It will break and then pull back in 5. More likely it will do something like this, and then pull back, and then launch. That would be what you want to see if you're bullish. And the surprise is it's some kind of 1-2, 1-2, and it just moons. But as long as it's here, it's only 3 swings. So this count is valid. And just like the market, it's stuck. It doesn't know. It's confused. Doesn't know what to do. STEM. STEM. I don't know if anyone's ever we've ever looked at that. I assume you mean the stock here. I guess like we have looked at it in the past. Let's see. So we never so this one didn't work out here. We did get this WXY. I wanted it to get higher, and then this could have been a short area, and it was even a bigger possibility for another swing higher. So we just didn't get that swing. So what does that mean? It means it's a lot more bearish instrument than we were thinking. So that's unfortunate, but let's take a look at the stock overall. As you can see, we broke the low. So it's in a death spiral. It's in a death spiral. It's in a go to zero chart. So I don't know what these guys do, if they're in some financial trouble, but they're in some kind of death spiral. And this is your AB, and you even broke that low here. So it's in, yeah, this thing's in a lot of trouble to the downside. It's not getting any bounces, and that's the way it looks. I think looking at it here, it looks like to me you've got a 1-2 here, and now it's forming another 1-2. It's trying to get the got a 1-2. It looks like it has another wave 2. It should just continue to push lower. So that's kind of what I'm seeing here. But you gotta do what's best for you. But yeah, it's just a real bearish instrument. Let's see, what do these guys do? Oh, solar, no wonder. Yeah, solar's screwed right now. Yeah, solar TAN, TANN is going to the $20 area. That's gonna take everything down with it. Um, you know, I guess the fundamental case around that is they said, hey, if interest rates are too high, people can't borrow money or take out loans to buy this stuff because it's expensive to capital, and so the cost of capital is just too high, and so no one buys it anymore. That's what they, I guess, just realized, and so now the investors, that's the meme going around the solar industry and why these things are now under pressure. And we had First Solar down here. We've had this topping out for a while. It finally broke down. Um, Solar will bottom when the TAN hits 21, and look, it's making a beeline down. I know it's unthinkable, but that's what the chart says. Another one that was unthinkable was Target, and we showed Target a long time ago when we broke this low here on May. We had the target for here at 53, and it's going right down there, and people are like dumbfounded. But using the system, it just goes right to where we say. So that's where solar's going. Solar's not a good opportunity for long holds, but especially if the bonds are going to continue to go higher in rates. But of course there's counter trend rallies, so there'll be bounces. But anyway, and SQQ, where does it potentially top out at? SQQ, where does it top out at? My thinking with SQQ is it all depends on what you believe in for the grand super cycle, and what degree correction we're in. So it's messy, as you know, but I believe that we will tag 240, 234 on the S on the Qs. If that happens, right? If that happens, you can do the quick math on where you think the SQQ can go. Let me pull out my calculator and do the compounding and see where that math takes us. And again, this is I never like to look at trades on like what I could make. I look at what I can lose. So, but it is fun to think about what could happen if we drop to like 230 on the Qs. Let's see here. I've just got this out here. 364. 2, 3, 4. We'll say 4 to be safe. So SQQ, what's it trading at now? 1836. That gets the SQQ back up to retest this high up in 60 and 70 bucks around here. The irony is we always had the SQQ target at 80 bucks. Wouldn't that be something if we hit it? But I mean, who knows? That would be like retest the COVID lows. But I mean, I think it could come up to retest this resistance in this leg I have shown here. But of course, nothing's in a straight line, right? So it's going to be ups and downs. To negate this, you have to take the low back out at 16 or wherever this low is at 16. But you got to see this trend line coming up. You crossed it. This downtrend line. That's very significant. So typically when that happens, you at least get a 50% retrace of the leg. That gets us up to 42. So that's what I'm saying. Tech's under pressure, and technically, there's things happening behind the surface that people aren't really noticing. But this is what I think, where I think it could go, and yeah, probably won't go to 80 anymore because of all the shrinkage that it has. As it compounds over time, it loses value because it resets. It's because of the way it's structured. So maybe there, somewhere around there, and that would be awesome. Now, I mean, if you break out of this pattern, I mean, the next area of resistance on this chart is 100. I mean, now you're talking grand supercycle crash of the ages. You're talking like Great Depression shit, right? I mean, 7. I mean, this would be like the triple Qs back down to the 2009 lows, right? So, so how high? I don't know. It just depends on what your case, where you think the market's gonna go. You know what I mean? So that's how you think. But yeah, if you believe, and there are people that believe, a lot of that say yes, we're going back to the 2009 lows. I mean, we're going like it's going to be an epic meltdown. Like the Dow Jones. I'll just use the Dow as an example here. Is in a massive parabolic blow off top here that's about to break. We have all these gaps on the daily cycle. Hell, one of them's a weekly gap, and then you have even gaps here. We forget about these gaps, but these are daily gaps as well down here. And we go back and we fill all that shit, and we come all the way back down to this line. This line. If you believe that, then yeah, the SQQ will be $1,000 or more. So I mean, it depends on what you believe in. Could be buying the SQQ now could be like buying TQQ if it was around back in 1987. I mean, imagine if TQQ was around back in 1987 and you could buy it and hold it through all this. Well, is SQQ that kind of opportunity where it'll just compound and come all the way? I mean, I don't know. It could be. I mean, this would be like Great Depression society unravels, World War III shit. If you believe, but some people believe that. Some people actually believe this is going to happen. It's just going to come all the way down, and we would be in a different world. It'd be 50% or more unemployment. No one will care about Taylor Swift and the Kansas City Chiefs and the Phillies. No one's going to give a shit about any of that. It'll be like survival mode. And hell, your bank may not even survive. And that's the other thing. The counterparty to the SQQ, right, may go bankrupt, and then you lose everything anyway. And you can't even collect. So that's other risk. There's counterparty risk, guys. SQQ doesn't actually own any assets. It's a bond. It's a liability that's paid by the bank that runs ProShares. And if that bank goes under, like a bondholder, you just get you get a haircut. You get pennies on the dollar, if anything. At least the bondholders come before the equity holders if this bank holds any equity. But that's why like. These things may not even pay out, even if you win the lottery, so to speak, and you get this massive meltdown. If all the banks go out of business or collapse, and these things aren't going to pay out, or the volatility could get so high, you get like a massive drop, and then what if one morning you wake up and it's up 30%, and boom, the fund's busted. So you gotta be, so it's like I wouldn't worry about where it's going. That's why it's like more day trader, swing trader type instruments. Not a long buy and hold unless it's on the bullish side, because the bullish market's more calm, no volatility, steady grind higher. The triple ETFs are great for bullish markets, but really terrible for choppy sideways bearish markets like we have here. Really terrible holds, long holds. But if you can get a wave 3 on a bear market in a triple ETF, bear ETF, it's like amazing cash in a short amount of time if you can catch that wave 3. Which we could be about to see here. Yeah, we could be about to see. So we'll find out soon enough if this is the right count. But anyway, thanks again for the super chat. All right, so I've been on for longer than I usually am. I'm going to wrap it up. I'll just kind of flip through your comments. If there's something quickly I can answer, I will, and then we'll do this again later. And I was traveling a lot, wasn't able to do a lot of these live streams like I normally do. All right, we did Bitcoin Cash. Everyone's got that done. SQQ. I don't have QGen. I got to skip over that one. Pod is so tempted here, but I don't like the market setup. So the market setup is scaring me a little bit. I would love Pod better if the market was trading down in this area, but I mean, it's like one of those things. A lot of people believe in trading the chart in isolation on its own merit. If you're that type of trader, then yes, Pod's a buy here right now. It's on the long-term support. It's in a wave 5. You have all the divergences lined up. You know, it doesn't get any better than this. But what I do know is the overall market is got more downside. So I do think this fifth wave could extend lower. But you'll have to do what's best for you. But you need to be prepared for that if the overall market is still going to push lower. But anyway, but if you trade this chart on its own merit with your blinders on to the rest of what's going on, then yeah, you should be buying it right here. You should be buying it. Bitcoin having if it does, it'll have a shakeout and then a run higher. So the thing about this wick-off accumulation, and I don't do this, but wick-off accumulation normally has a shakeout and then a rip higher. So we would see something like a drop and then a massive move higher, but like a flash crash move. You know, that I would like that better if we make a new high. Then you could, you know, again, I have this flat, but you can also make it as a 5-wave move. Maybe we do 5-wave move and flash and like flash crash and then come up. So typically they call it the spring, right? You need the spring, a wick off spring. So you need the spring. So if once the spring is set, you have to expect for that spring, which is like a flash crash type move, which is a spring, and then you have to like close your eyes and buy it and pray that the spring, you know, bounces back. But sometimes it doesn't. So I don't trade the wick off pattern, but it could, yeah. If you get the spring, you may have an opportunity to try that out. Um, yeah, I showed you TMF. We talked about TMF. Yeah, GDX should be bouncing, but I think it's bouncing early. I think GDX, again, this people to want to buy the dip too soon, and that usually means it's going to fail. This bounce will fail. I think, you know, it came within 10 cents of our target. So, you know, I look at this and I go, okay, so GDX, this is a great opportunity to buy it here. But when I look at the wave structure, it didn't go deep enough in, and I believe whatever happens here is going to fail and it's going to go deeper. So I'm not chasing it here. I'm not chasing the GDX, but I do think it's got a relief rally, a bounce coming, and then I'm pretty sure the bounce will fail again. And you know, I wouldn't be surprised to see the $21 taken out because this is an ugly impulse. This is kind of forcing it. This could still be 3 waves. So this could be a 3-wave move down, a connector, and there's your first wave, a connector, and then you make your final move. So I actually don't like trading it. And also, and again, I don't bring fundamental news into it. I just was accidentally watching Bloomberg one day, and one of those gold miners reported earnings, and they said that like higher rates in the commodities, oil going up, hurts their profit margin, and they don't make as much profit because the value of the metal isn't high enough to offset all that. So once they said all that, the stock fucking, you know, went down like 10%. So the fundamental investors aren't going to be buying this thing when when like Newmont and all these things report, with gold trading now at like $1,800, and oil's up at 80, $90 the last month or so. I just think it's set up. Fundamental analysts are going to be set up to be blindsided again with that, and they're going to still capitulate lower. I think it's set up. Gold miners are set up for a deflationary environment where if you can get rates lower, gold higher, and the earnings picture can increase their leverage on that, then I think gold miners outperform everything. But I don't think we're there. So the fundamental picture, which I never really bring in, also is not doesn't make sense to me on why this would want to go higher, right? I mean, the value of gold is lower; it's dropped, and energy's higher, and rates are high. Like, it doesn't make sense to me. Why would the miners be bullish, right? And gold still has more downside. Oh, it's a uranium play. Okay, cool. Short squeeze is a way that divergence is erased, right? So I'll just give this guys this lesson, and again, this is what happened with TMF. If you're, I've always mentioned this. That's why I don't divergence trade typically. It's very rare because there's always a chance divergence is erased. So here you have a five-wave move, right? It's a beautiful five-wave move, right? Let's say you're an Elliott wave guy and you're like, oh, 1, 2, 3, 4, 5. Oh man, I want to short this. I want to short this. It's five waves. This is the time to short it. Um, Unfortunately, what can happen is, let's say like this third wave. Let's see, like if I can subdivide this third wave into five waves, right? So let's just say here, like I have here, we had this same setup, right? Let's say we had here 1, 2, 3, 4, and I'm like, oh, I want to short this right here. It should be 5, and then boom, 3, 4, 5, and you get blown up. That's the short squeeze. That's the divergence got erased, because there was divergence here at this moment. Right here, it was divergence. So right here, there's divergence, right? I should short it, but then I get blown up, and then what happens is this becomes a 1, 2, 1, 2, just like you have here, and it just keeps extending. So divergence traders always risk that situation, which is a short squeeze in a 3 of 3 breakout, or the opposite is, which I think we could be about to see, is we call the black swan meltdown. Unexpected news, a catastrophe, a tragedy in the company, you know, Enron moment, who knows what it is, and then all of a sudden what looked like a nice wave 5 area to buy, I'm going to buy the dip, turns out to be a 1, 2, 1, 2 like TMF, and it just crashes. So that's the risk. So I took a risk on TMF because the alternative was, well, am I going to really think a 5 or 6 sigma event's going to happen in the bond market? And if what does that mean for the overall picture of society if these long ends are going to go to 7% or higher in such a short period of time? That'd be like a catastrophe for the market. But then it's happening. So but I took a bet that wouldn't happen, like most traders did, and unfortunately we got the 5 or 6 sigma move in the market, which has never happened before. And people that are buying bonds now are still in the they're gonna be really sad because they're not seeing the 3 of 3 here, and we are gonna break through this. Well, and like I said, it's pretty much a straight shot to 7%, and then the mortgage rates pretty much are a straight shot here to 10.5. So buying bonds here is not good. This is a sad situation that developed last week, a historical one with, but we saw it coming, and then the 2 year also gave us the warning sign a long time ago here too with this 2 wave. It placed it really early here back in March. We were able to confirm that with the breakout here on July that this was a 2. So the 2 year was leading the bond. This was telling us that we weren't going to get a deeper pullback in 2, which is what I would have expected. And now it's just ready for a hot CPI to grind this thing up to 7%, get this thing going. So, I mean, would I be surprised if CPI is super hot? Not at all. given the market seems to think that's what's going to happen. So the market seems to be pricing in more rate increases, but is about to be pricing that in, but not yet. It's like holding back. As you can see, the 1 year and the 2 year has kind of been, you know, it's ready. It's ready to explode up, but it's just holding itself back. Uh, but anyway, um, um, 420 was the low. There's always a possibility. There is a lot of oversold indicators, and like I was just mentioning, that's those things sometimes work, sometimes they don't. So what you'll want to see is either this two. Well, I think the SPY is the better way to show it. So if the SPY can take out 433 and close in this area, the bulls are back in control, and then it's just something completely different. And it would change. And of course, yeah, I mean, anything's possible, right? So there it is, 433. So if you can do that, because what will happen is then this two would be too strong of a move. And I wouldn't label it as a four wave either. So I would say if it got up to there, then you have to look at this as an A, B, C, which is a corrective structure. And what that would mean is it would either be a bigger retrace up followed by a bigger fall, or a push up in a flat to try to retest the highs. Well, not a flat, not that's a different indice, but you would make a new high like and then have a massive meltdown. So that's the alternative. So that's why it's do or die time for the bears next week. It's do or die time because if they allow this thing to pump, then the bulls are going to be in control and with the oversold conditions, yeah, and then things will get heated up. But I don't personally think that's going to happen. But you got to do what's best for you. But I mean, there's always that chance. Technology shows a lower low that didn't go deep enough. It shows a good setup here. But if technology can pump up to 370, then yeah, it negates this. I think it becomes an ABC, and then this is the one I think could be a flat, where you actually have an A, B, and a C, and you make a high to like 381, and then you have a massive meltdown. So, but as you can see, you still have I keep saying we have a massive meltdown. So it's still not like the bull market's back for all. It's just a short-term trader. As a short-term trader, where are you going? So we'll see. It's a moment of truth though for the bears to see where we go with it. But it would need technology. You would need Nvidia new all-time highs, Apple all-time highs. These things would need to get going to get. You need all that. And I don't think those are that. You mean is is Apple that oversold? I mean, I don't think so. It's been strong, right? This whole time, right? That can't be that oversold. That's overbought, right? Look, that's overbought, right? That's not oversold. Daily, that's not oversold. So I think some things are oversold, but the leaders, the Magnificent Seven, sure as hell isn't oversold. So that's what I mean. That's what I see in the market, and the Magnificent Seven lead the indices. Obviously, they're going to break. So I think the Magnificent Seven are not that oversold. I think there are other sectors oversold, like pod is oversold. PODD, that's oversold. That's gonna that should have a face ripping rally eventually. It should, but will it happen next week? I don't know. It could maybe, but yeah. Usually the short squeeze is a 3 of 3. Almost usually, because what happens is everyone's still bearish in wave twos, right? You're in a 1-2, 1-2 setup, and the news is still bearish. The fundamental news is still dead, like horrible, and then some like unexpected surprise comes out about the company, like a new product's approved, or maybe earnings, came out like Nvidia stronger than expected. No one anticipated, or there's a merger that no one saw coming. It's always like something like so positive, and then you get a 3 of 3 because sentiment is still bearish, right? 3 of 3, it turns euphoric. The shorts give up. Then you get the media attention. Then you get FOMO in, then everybody will throw every dollar they have in it, and then nothing can stop it. And then wave five is you get profit taken in wave four, and then wave five ends at some unexpected calamity, company news that no one expected, and then we start the whole process over again. And then there's fear. So yeah, three of threes is like usually a short squeeze, and also fundamental investors FOMOing in the big money. Some piece of news came out that drove bulls to like go long. Momentum chasers see the breakout, they go long. Shorts squeeze and panic and cover and get out, and shorts don't dare enter that. So basically everyone's on the same side of the market, essentially. And a lot of day traders, that's what they're always looking for. Where's the 3 of 3 today, right? Where's the breakout? They're breakout traders, momentum traders. They're trying to search the market every day to find the 3 of 3. And there is. I think every day there's a 3 of 3 out there. There's a stock that's having a 3 of 3 moment. And if you could ride the tailwinds of that down or up, you can make a lot of money. But you have to know where to find those and get in and get out and have enough presence of mind to get out. But there's a whole strategy, and a lot of people on the internet look for that, and they have a lot of technicals. They try to find 3 of 3s. That's essentially what their trading platforms are doing. They're looking at volume and this and that. But they're searching for 3 of 3s, because they just trade 3 of 3s, and they're looking for those in the market. But they are rare, and they come though, and they are out there. They happen. Yeah, you call me Elliott Wave Sage. Well, the Q3 earnings is what really got the bear market started in 2000. The earnings miss by Apple created the end of the connector wave of the bear market in the dot-com boom. So my guess is one of the Magnificent Seven is going to have a miss, or big, they're going to blow earnings, and then that will be the trigger for the meltdown. Because then the fundamental investor has nothing to hide behind. So we go back to the dot-com era here. The connector wave ended. Let's see here. Let's go to the triple Qs is better. Yeah. See if I can get to this. But this connector wave, ironically, it was September, right? This wedge, whatever you want to call it, ended right here. And I showed the news story on my Twitter feed. Apple reported earnings miss, forecast lower. What happened to Apple that day? 50% haircut in one day in its stock. It lost 50% in one day. And then, of course, all the tech stocks followed suit, and the rest is history. So I believe earnings is the engine behind a lot of longer term trends like this, and I believe one of the Magnificent Seven is going to do that, and they'll have a similar haircut, maybe not 50%, but 20-25% haircut, and then all hell will break loose in technology. There's plenty of room on these charts for some downside correction, right? And I've shown this before in technology here. Like, if we go to Apple here, I mean, from the October lows, right, or December, we're at 177. It could take a 20% haircut and still be above the highs and still be up. Amazon, it could still take a massive haircut and be up. Facebook. So these stocks are set up for these haircuts. Like, look, this is set up for a haircut, 200. And guess it's still going to be way off its highs. So these stocks can have major haircuts. It isn't like we're trading down at support, right? You know what I'm saying? So these things are set up for that. The market makers are setting people up. Google is set up for that, for this drop. It's at 137. It could take, a 25% haircut. Boom. It'd still be above its highs, and it'd still be bullish. That's why I think these things are being set up, and it's just going to take who's going to be the one that's going to report the bad news. And I don't know. Pick your pick, but one of them is probably going to disappoint and it's going to create the whole sector. Now we know Adobe's reporting next week. Could Adobe be it? Now I don't think it's a Magnificent Seven stock, but still a mega cap. Will be interesting. It is an AI equivalent stock, so big miss in Adobe could send the AI complex tumbling. So we'll see. It looks like it's set up for something to the downside, right? Top in pattern, short area, can easily retrace down to 340 and still be bullish, right? So, all right, I'll leave you guys with that. So, yeah. So anyway, that's all I got to say on this, and good luck to everyone. Thanks for the super chats for those that gave it to me, and I appreciate that. Oh, hey Mark, I just saw another 10. I don't think I got to those. Sorry about that. Yeah, let me get yours and then I'll wrap it up. Then I got to wrap it up and get out of here. ELD. ELD on the ASX. Yeah, it's 5 waves from that low. And now it's correcting. So this is a deep correction here in an impulse. You see? So that's not good. So it should bounce, right? It should have a bounce. But that bounce should probably fail. So it's probably going to do something like that. Now again, like we just had that talk, it could be a 1-2, 1-2, and then you get 3 of 3, but it's unlikely given that you have 5 waves up, you already have a massive extension in 3 here, that would happen, but anything's possible. It looks like it's setting up for a left shoulder ahead, a right shoulder here, and then a break of that neckline to retest this low. But I would believe that low will hold, but this is kind of what I'm looking at for ELD. Your next one, AD8. Oh, that's a good chart. Let's take a look here. So you see how you haven't take that peak out, so you're probably still not in a wave 3, but you're in a sequence higher. So that's actually pretty bullish still in this. So here's a 1-2, 1-2. So here, yeah, it's probably this 3 right here. So, so one of the things you look on the weekly, you see this RSI peak hasn't taken that peak out. Typically in wave 3, it will. So what that also tells me is this may not be 3, it may be another 1-2. And you actually have another really big push higher coming when this 2 is finished. So I would be looking for something like this. So it's obviously very bullish. Whatever these guys do, people want to buy. And here, let's take a look at this sequence. There's divergence here, so this is just a connector. So it should take another swing lower. So this is a dip buy here at 1162, 11, or fill the gap at 1035. So that's kind of where it could be an awesome lucrative opportunity to dip buy right here, if it gets down here, for a 3 of 3. So we talked about where's our 3 of 3s. So this could be our, potential 3 of 3 setup. I think it is because we didn't get that divergence erased. What do these guys do? Some kind of looks like some kind of tech company. All right, well we'll just add that to the tech area. I would say that's how I look at that chart. And then ResMed, I think isn't ResMed one of the GLP-1 casualties? I think getting hit. I think that group of stock isn't finished going down quite yet, but they're very close. Like Pod, yeah, you would think all these companies are going to go out of business, but so let's see here. Yeah, it's obviously grand supercycle correction with divergence. So it's corrected in the grand supercycle. So let's take a look at where things may end up. See, we're close, but not there. Like 126, but here's the trend line, 106. So I think somewhere in this area seems to be where it should go. Here, it could truncate. There's always a chance of it truncating. I mean, look, see, this is why oversold is meaningless. Look, oh, it's oversold. It should bounce. August 9th, September 22nd. I mean, come on. I mean, how many people were hoping for it? So that's why you can't trade this oversold stuff. I mean, it's interesting, but look at that. I mean, I don't know. Maybe these companies are, the whole business model's in jeopardy. I don't know. So what it looks like to me here, looking at the internals, this looks like an AB, like some kind of WXY move down here. Well, clearly this cycle's over. So that has to be the bottom. If it isn't, then it's not even going to find support there. I wouldn't even use that. I wouldn't even buy the dip. So I would buy the dip against 136, but because the reason I say that is this whole cycle is being corrected. If that cycle breaks, then it's just a 1, 2, and it does that, and it goes even more into free fall. So you have to believe it's a finished, and it hit the bottom here at 135, and it's done, and then it's going to start a whole new bull market, or it's probably going even below this, and it may come back to the historic trend line right here. That's the historic line. Hard. I mean, I guess the GLP-1s are really hurting. So that's how I would look at it. So the cycle is over. So if it breaks, it could be a 1-2 in C. The other option is it's just another impulse. 1, 2, 3, 4, 5 bounce and then crash. So it's just if you believe this is going to go to new highs, you have to believe then it's ready to roll here. Okay, that's it. So I think I got all the super chats, and yeah, TMF I've got earlier in my video. You can watch that later and go from there. All right, guys, that's all I've got today. Talk to you all later.